there, it's Ryan Skaggs, and this is your Mortgage Minute. We're going to talk about investment properties and second homes. So a while back, we had an update from Fannie Mae and Freddie Mac. I affectionately call them the GSEs. So if you've ever watched the movie Green Street Hooligans, you'll chuckle. But GSE really means the government-sponsored entity, meaning the government has the backing of Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac make the rules for all conforming loans. If you heard a jumbo loan versus non-jumbo, they are everything non-jumbo and below. Right now in this market, Greater Chicagoland, that's 548, 250. So what has happened? They came out and said 7% cap in our portfolio for investment properties and second homes. We need to free up cash flow for owner-occupied properties and not as much for investment properties and second homes. So obviously 2020 with that influx of refinances, now we've seen a ton of purchase business come through. It is very difficult to finance an investment property now with those same parameters that we had before. Lenders are looking at it going, oh my gosh, like if I can't sell it off in the future, what do we do with it? And basically what's happened is somewhat of a little mini liquidity crisis, and we've seen rates shoot up. So when I say now is not a great time to buy an investment property, I can't underline, bold that, circle it, or do anything else with fancy letters to let you know that financing is considerably more expensive for investment properties than ever has been before. So the rule of thumb is that I would tell people is between whatever the going market was. Let's say that the market is at 2.98, which is your average 30-year fix this week, up from 2.97. That is the average 30-year fix according to Freddie Mac. Check out that link below. While you're below, click that like button, hit that subscribe, and touch that bell icon to be notified. I do weekly updates on the mortgage market and real estate. Thank you. Now, so while you're down there and you're looking up of, hey, where's the average 30-year fix? Let's say it was at 3%. Previously, I would tell clients, hey, you want to add at least 0.5 to 1% over whatever the market is for an investment property, meaning that you're going to put a renter in there or you're buying as an investment opportunity. So if the average 30-year fix was at 3, you could consider that at 3.5 to 4. My rule of thumb now is that they should add 1.5%, and there's going to be likely a higher cost associated with actually doing that investment property mortgage than without. So, or before this cap. So that is significant when you're talking about cash flow and things. Like I've already reached out to a ton of my clients that hold investment properties and said, hope you got that, refi in. I'm glad we're able to take care of that. If you're looking at something in the future, let's wait till some of this maybe gets figured out with Fannie Mae and Freddie Mac. And I know the Mortgage Bankers Association are hitting them up, poking them on all sides, going, hey, White House government, like this isn't going to work for too much longer, or we're going to have a problem. So we've also seen Congress introduce a bill, or at least start the conversation on the $15,000 tax credit that President Biden talked about during his inauguration. And I'll click to the link somewhere up here to the actual, hey, what to expect out of the new presidency and the new administration. And then if you remember last week, and I'll click up here as well, is that we talked about the new $25,000 idea that was put out there. I'm not going to say a bill. I'm not going to say a program, because it is just an idea for first-time home buyers of first-generation homeowners. That seems to be incredibly complex with a lot of moving parts. So that's going to have to get solidified as well. So a lot of kind of big news in the last week that will definitely have effect in the future of mortgage financing, either from first-time home buyers or from investment properties or second homes. So I do have a solution. If now is not a great time to buy an investment property, now is an absolutely great time to finance a primary home. So a lot of people have equity or are using that as a tool to be able to finance those investment properties. So if you have a question, put it below. Thanks so much for tuning in. This is the Mortgage Minute, and my name is Ryan Skaggs. Thanks so much for tuning in. Have a great day.